Well, let's go to the markets, which this week hung on the fortunes of the world's largest computer chip maker, Nvidia. As it turns out, even Nvidia's very best performance in this latest quarterly sales report, $57 billion in sales, a forecast of $64 billion in the current quarter, it simply wasn't good enough. Share markets fell nonetheless. They got a bit back at the end of the week as investors questioned a payback period for the trillions of dollars right now being invested globally in the new generative artificial intelligence infrastructure, energy, and these new generation chips. Well, the man who best explained it this week, I think, was Nvidia's chief executive, Jensen Huang, who spoke with Fox Business's Liz Clayman late this week.
One of the things that is really great about NVIDIA's architecture is that we're so diversified. You know, we run all, AI is not just one thing, it's not just one language model or one chatbot. AI is a system of models, and you could use it for, of course, chatbots, but you could also use it for physics and biology and chemistry and, of course, robotics and self-driving cars. And even within language models, there's so many different architectures. NVIDIA's architecture is the only one in the world that runs literally everything. And yesterday, we announced a big partnership with Anthropic, and now we're the only architecture in the world that runs every single premier AI model, as well as every single open source model, and of course, every single version, modality of model. And so our versatility makes it possible for us to have a lot of different customers. And for all of those customers, we can bring them a lot of other customers that ultimately use their cloud capabilities.
Yeah, it feels like all roads are leading to NVIDIA. How are orders for your next generation chip, the Rubin, trending? And are you still on track to ship them at the end of 2026?
Well, I announced at GTC that starting this year, because we started shipping Blackwells, over the course of this year through the end of next year, we have visibility of $500 billion worth of Blackwell and Vera Rubin. And we'll start shipping Vera Rubin in Q3 timeframe of next year. The silicon is back. It is working wonderfully. Engineers across NVIDIA are bringing up the system. It's doing it beautifully. And we're on track for volume production in the Q3 timeframe of next year. In the meantime, I announced that we have $500 billion worth of visibility, but in the last 30 days, we announced some major new wins that were not included in that $500 billion. So we're adding, of course, the Anthropic opportunity. We're adding Elon's xAI now being deployed in Saudi Arabia. We announced a partnership with Humane, and those GPUs have been licensed, and they're going to be deploying in Saudi Arabia. And we also announced that AWS is going to also build 150,000 GPU AI infrastructure in Saudi Arabia. All of those are all net new. And so orders are still coming in. And so it's going to be a pretty busy year for us the next year.
It sounds like then the current quarter is going to be crazy good. Can I say that? What do you think?
Well, we guided to a much larger quarter next quarter. And so the guidance that we provided is crazy good. I would agree with that. And but, you know, we're in the beginning of a very long-term build-out of the fundamental infrastructure of humanity, which is computing. As you know, we reinvented computing for the first time in 60, 70 years. And so all of the computers that have been installed around the world is being modernized to accelerated computing, NVIDIA's GPUs, and to artificial intelligence. And so this build out is going to last us many years to come.
You know, it was exactly a year ago, and this is why I ask about Rubin orders, et cetera, because it was a year ago that you and I spoke about the problem a lot of companies wish they had. Blackwell orders were pouring in from the fire hose so fast, demand outweighed supply. What specifically have you changed to prevent any bottlenecks when Rubin rolls off the Taiwan semi-assembly line?
Well, you know, we're not going to be caught flat-footed too many times. And we now have a much better understanding of the scale.
Yeah.
And the breadth, the diversity of our customer base. We've done a really good job planning our supply chain. We now have the largest supply chain of any company in the world. We work with TSMC, of course, manufacturing in Taiwan, and then also very proudly, for the first time here in the United States, we work with every single memory vendor now. We have 3 different sources, 3 gigantic sources of really complicated memory, and every system maker in the world are partnering with us.
Well, the question of returns for investors, not just from Nvidia, but indeed for the whole tech sector, is now permeating the entire stock market, with most of the stellar returns posted earlier this year now being stripped away. So, how should an investor view the boom and now this retraction? Alex Pollak is Chief Executive of the tech specialist funds manager, Loftus Peak, and joins me now. Alex, always great to get your perspective on this sort of stuff. I mean, Nvidia, they could not have done better with that sales report they brought out, but it was not enough to maintain or reassert any sort of a sense of control inside the stock market.
Yeah, I mean, investors have just got the jitters, and they've got the jitters about a couple of things. One of them is that guy that sold out ahead of the big, that movie in The Big Short. He sold out of his shareholding in Nvidia a couple of weeks ago, and there's been a few other sellers, and people are starting to sort of, get their hairs on fire about whether the capex of $1 trillion is going to be serviced by the revenue that comes in. And everyone's kind of going, it's just all getting too hard right now. I don't know what to think about this. So it wouldn't matter what they posted, I don't think. The investors have got it in their heads that they need some more time to process this. And honestly, I think this correction's a bit healthy, because they need to process it, right? It's a lot to process.
And it's also a lot of money that's having to be committed, not just, say, in the chip makers or in the data centres that are being built right now, but it goes to every business on the planet that's having to commit to GRU chips, to modernise their own businesses. And of course, everybody's now saying, when's the payback? What does the payback look like, I guess?
Yeah, I mean, people are looking for that killer application like email was to the internet, and they're sort of saying, well, I don't know what it is that I'm going to be using, AI for. But actually, if they sort of really think about it, they're using AI every day. I mean, it's a spell correct on your typing, and it's the, I went in, I had a consultation with my doctor the other day, and she ran the AI over the top of it. She asked me. And as I left, she had all the scripts just banged to my phone instantaneously, and the referral letter to the specialist all done. So she would have had to have, if she's seeing 20 patients a day, that's $50,000 or $60,000 a year she would have to pay for an administrative assistant to be able to do all those scripts and all those little jobs that AI just picks up and does for you. People are sort of saying, yeah, but I don't have that particular, necessity for, to write scripts for AI. But AI is different for everybody. It's like a Swiss Army knife with a billion attachments. You might only use one, but you can't buy just that one attachment for the Swiss Army knife. Everybody's got a single reason for wanting to use AI. All those reasons are different, but you can't just say, oh, I only want this bit of it or that bit of it. It all comes out of one central idea, which is this, language model that predicts what's going to happen next. You can't strip out this bit from that bit from that bit. It's sold as a package.
I was really fascinated listening to Jensen Huang, but also listening to his analysts' call this week. I thought it was really instructive in where the future goes. He, better than anybody else, justifies the trillions of dollars that will be invested into this to really make these chips faster, to make them more interpretive into the future, to basically do more of these basic jobs that you're talking about. And the payback doesn't necessarily come to this company or that company. It might, but it really comes to a whole economic view of the world, I guess.
Yes, that's 100% right. What investors are nervous about is it's all come in a rush, right? 2 years ago, nobody had heard of AI, and then all of a sudden, there's trillions of dollars of money being committed all over the place, and people are, correctly so to some degree, and people are just going, well, hang on, I'm a little bit, I'm not comfortable with this as it stands right now. Give me a minute to process it. That's what this correction's about, I think.
So give me a sense of the investments that you're sort of now trying to calibrate as to which have the greatest opportunities. Because it's my sense is that the data centres, the chip makers, they're effectively just building the infrastructure. It's what comes off the back of that. That's where the genuine advancements come from in the future. That's where, if you like, the genuine money is going to be made, regardless of what sort of a clawback we get right now.
Yeah, I mean, and for those, specifically around that question, right, the obvious and the sensible way to play it, and it's one of the ways that we play it very, carefully and on an ongoing basis. We own Microsoft, we own Google, and we own Amazon, and we own those companies for their position as hyperscalers serving businesses and consumers, and people don't even necessarily know that they're using the cloud when they're watching Netflix. Why would they? But they're using those businesses to serve AI. And so the point about it is those are the businesses that wholesale will be buyers of AI. And that's one of the ways that we are playing it through the Microsofts, the Googles and the Amazons, because they're the principal, as it were, servers of the AI services.
So you are an active funds manager. You try and pick these opportunities, see where they might last, see where there might be some value for the longer term. But a lot of people play it differently. They simply go and buy the exchange-traded funds for the NASDAQ composite or whatever it might be. So if there is a flyer that is unexpected, they pick up a little taste of that. The problem is when markets reverse as they are now, they also pick up the downside.
Well, that is correct. But we're an ETF. We're an exchange-traded fund ourselves. So this, correction has resulted in a 5-6% reduction in the value of our shares. We're not bleeding out here, far from it. It's just we're a diversified fund as well and we're trading as an ETF, and our unit price on the ASX, on the stock exchange, has come back, as it were, in the last 3 weeks from 580 to 540. I mean, it's not great, but it's hardly calamitous.
And so the reality is, are you still finding people wanting to put capital in? That's the key to these things, isn't it? Because, of course, if there's capital coming through the door, you've got to expend that capital. You've got to find these opportunities.
People have been hanging back on the sideline for months, waiting for a moment when they think it's going to pull back. I know we've got daily inflow coming from investors that are saying, oh, here's my moment. It's come back 5, 6, 7%. Now I have a chance to get in. We see those flows on a daily basis, and we're not surprised by it. And as you say, those inflows we must deploy into the companies that we talked about.
The thing that also got me about Jensen Huang, and it gets me when you hear Elon Musk speak or some of the other chief executives of the big tech companies, the far-sightedness with which these executives are thinking right now. They're playing a game that is almost many decades into the future for where they think their technology will change the face of the earth. I think that's one of the things that really gets me listening to Jensen Huang this week.
That's 100% right. Nobody had heard of a large language model. People understood that machine learning was all around us 5 years ago. We first bought Nvidia ourselves, Loftus Peak Fund. We first bought it in 2016 at an adjusted price of 75 cents. It was obvious that there was a whole lot of machine learning going on. The large language model that was developed over the course of 2020, 21, 22, we were watching where that was going. And it was quite, what it is, the large language model is it's a probabilistic thing that, based on everything that's happened before, what they call the training, predicts, as it were, the next word that will happen. And the example I give sometimes is, that sentence they use to train you at school to write properly, the quick brown fox jumps over the lazy. You punch that into AI and 99% of the time it'll come out with the word fox at the end of it, because that phrase, quick brown fox jumps over the lazy fox, has every letter in the alphabet, and that was what was used to teach school children how to form every letter. So all that the AI is something that predictively says, these are the things that happened before. The most likely word that happens now is the word fox, based on everything that I have learned from my training. It's simple in a way, but the maths is stupendously complex. But the underlying principle is not difficult.
I'll tell you what, it's always fabulous to talk to you about these things. Alex Pollak, the Chief Executive of Loftus Peak, many thanks for your time today.
Thanks, Ross. It's been a pleasure.